Hi everyone, it's Gerry from the DeFi Alpha Gaming Guild here with another Alpha video for you today. And today's content is on Apollo DAO and why I think it is a bit of a sleeping giant of the Terra ecosystem. So let's go into the details. What is Apollo DAO? Apollo DAO is an auto compounder. Primarily, they've got auto compounding vaults among a few other offerings. So I'll just explain a little bit about the vaults here. When you jump onto app.apollo.farm, you can come and deposit some UST into a bunch of various farms, or you can actually deposit the native LP token of those farms, and the rewards generated by those LPs are harvested and auto-compounded back into that same pool. So it increases your returns by being a liquidity provider and gives you a much higher rate of return than you would normally get because it reduces the maintenance of claiming your rewards and redepositing them. It does it all for you in smart contracts, and it's a far more efficient way to farm. So that was their initial offering, and as you can see here, there's some quite high returns on some of these tokens. And it's not just crypto assets, there's some like mirror assets here using the mirror protocol. So for instance, here's Robinhood, the M asset for Robinhood in a pair against UST. So we click on that, we'll get a bit more of some details here. So yeah, you're getting about 15% APY natively in the actual returns of the LP, but you're also getting some Apollo incentives as well. So you'll be earning the Apollo token, for instance. So that's the vaults. That's one part of their offering. It's sort of the main thing that they spun up. But they've also got this Launchpad via community farming, so community farming events. I'll just bring up the Terrapin's Twitter page here. So this is a PFP NFT project within Terra called Terrapins, and they're going to be launching their own play-to-earn game. And to provide liquidity for their initial token, they've got a community farming event. So the idea here on these farmers markets is you can come in and deposit your LP positions or native UST, which will go into these LP positions. And the yield that you would get is actually paid out in the token that they're trying to bootstrap. And that's a way for people to get a lossless investment in this new protocol. And it's a way for the new protocol to bootstrap its own token and liquidity. So it's quite a clever way to go for it. And this one has only just started, Terrapins. There's another one at the moment for Deviant Factions, which is a card trading game as well. So have a look at that if that's interesting. But that's the second product that Apollo offer. It's a Launchpad via community farming. Now, the third thing that they've been working on is quite significant, and I don't think many people are aware of this yet. It's DAO tooling using the Apollo Safe product. So this is kind of the equivalent of Gnosis Safe, if you're familiar with that on Ethereum, which I think has over $100 billion locked up within it. So it's quite significant. And we'll just have a quick look at the Apollo Safe image here. It's now open beta. And this is basically a front end that's available for anyone to come in and create a multi-sig wallet address. So multi-sig addresses are used by protocols primarily in DAOs to hold the assets of the treasury in a safe way where certain trusted parties have access to that account. So the whole idea of a multi-sig is you might have a 3 of 5 multi-sig. That means there's 5 names on the multi-sig, and you need at least 3 of them to approve a transaction. And it's a way to safeguard the funds to make sure that trusted people are looking after the DAO's treasury. So that's significant. It's slowly being built out with further features, but to be honest, it's pretty impressive what they've done already. For instance, the Washington Nationals deal between the Lunar Foundation Guard and the Washington Nationals baseball team, they used this product to do that. So that's a massive endorsement when you consider that was, I think it was a $40 million deal. So no small amount of money in these contracts. So that's a very good test case for that. And the fact that people are using it with that sort of money is it's a really big endorsement. So Apollo, even though these are the public facing products, you can also think of the actual protocol itself as being a crypto hedge fund via the war chest that they've generated. And I think that's, for me, this is what got me super excited. They're not just a protocol that's generating a little bit of revenue through their offerings. They're generating yield off of their assets. And that's significant. If you think of a traditional hedge fund, basically it's just a basket of assets that just sit there and you just have price exposure, and perhaps you might collect some dividends off of those companies. But with crypto, there's so much opportunity, especially with decentralized finance and farming. These big brains can get involved at the ground floor and really harness the value of this war chest to make it grow over time. And as we can see, they've got quite a lot of juicy assets already in their war chest. Now, this isn't completely accurate. There's a few things missing, which I'll go into in a later slide. But as you can see, they've got over $5 million in assets listed here in their treasury, and that's more than the actual market cap of the entire protocol, which is crazy. I mean, this is the current circulating market cap, so keep that in mind. There is a lot of dilution to come, but that's going to take about 3 years to get to. And the rate that the war chest is growing at is quite phenomenal. We can see here, so the token generation, or the community farming event to bootstrap the token, happened on the 25th of October, and they had fantastic result. They locked up in the first 24 hours over $200 million worth of value, so people could farm this token initially. But you can see here how rapidly the war chest is growing. It's growing at an almost exponential rate, which is fantastic. So on top of that, because the war chest holds a lot of tokens, they'll be able to start using meta governance of other protocols. So if you're familiar with the curve wars, essentially these guys will be able to do that type of thing where they can use their sway with the amount of governance they have in other protocols to help boost their own pools and improve their own prospects going forward. So that's really cool. Just having a quick look at how it all started, they had a really big seed raise, 2.2 million raised before they had the community farming event. And you can no doubt see there's some interesting people involved with this. Terra Capital, they're a really big VC. Obviously, Do Kwon, we all know Do, the founder of Terra, and Yunt Capital, they're a really decent VC as well. And you can see other partnerships that they have here: Olympus DAO, Alchemex, White Whale, Parallel, the really popular NFT card trading game. So yeah, these guys are a big deal as well, and they're a very long-term focused VC, and they've been very active in being involved, which is super encouraging as well. So as I mentioned earlier, they had a 2.2 million seed raise, but they also had this community farming event. $200 million flowed into Apollo in its first 24 hours, which was quite incredible. The community farming event was so successful, they extended it with a second round. And as a result, they generated a huge war chest. So all the total value locked, all of that was earning interest and earning fees. And that was all flowing into the war chest, which meant they could bootstrap this with significant amounts of Luna, Ethereum, and UST. So from day one, they've had a diversified portfolio of some really encouraging assets. And having a nice amount of UST has really meant that they've been able to weather the storms and buy at good points in the market and use that UST to farm other protocols as they've launched. I also pledged to give 1% of protocol revenue to the Angel protocol, which goes towards charity. So that's a really nice thing to do as well. So just back on their assets, this breaks down in a little bit more detail what they've actually done and what they've got, because some of it doesn't actually show up on their webpage. But they've got like 5,000 Luna staked in Stata Labs, been farming the Stata token from day one. So that alone is going to be worth a pretty penny. The Stata token, I believe, was being farmed at 73 cents a token, and they launched their token price with their initial offering, their ICO, for $4.50. So that's before it's even been released to the market and had price discovery. So you can imagine the upside potential of the Stata Labs token over time. They also have over 1 million Astro tokens from the initial lock drop. They locked up a lot of tokens within Astro, and Max locked it. And as soon as Astro governance is available, they'll be depositing that and locking it up, max locking it as VX Astro. So it's going to be another source of revenue. They also have protocol-owned liquidity within Apollo. So they own most of the liquidity between the Apollo and UST token on Astro, and that's got dual farming rewards. So that's getting more Astro rewards as well as the swap fees. And on top of that, they're DCAing into more Astro every week. They're buying up about 20,000 Astro per week. So they're currently generating about $50,000 in revenue a day, and about a fifth of that is DCAing into Astro because they want to accumulate as much as possible. They're also taking part in the Prism farming, and I'm sure they'll be using a lot of Luna and refracting it into Y Luna and farming even further Prism, I would assume. They've also locked up $1 million in the Mars lock drop and max locked that as well. And they've got, I think, $1.2 million in Anchor just earning yield. So quite significant. It means there's still a bit of a war chest to redistribute that and farm other things. So they might be involved in some other tokens that have, those initial lock drop style launches where they can lock up UST. I'm thinking the Kinetics protocol is probably quite likely. So the other really significant thing is they've had a seed raise themselves already in another protocol. So Apollo DAO was part of the YFD, YFoundary DAO seed raise. So if we just have a quick look at that, this is a Foundry DAO. YFD, I think, is going to be the token. And basically this is going to be a community-governed set of vaults for farming strategies, particularly using the Mirror protocol. So you can see here there's some other VC investment, but there's also Apollo DAO as one of the backers. So that's really cool. It means they're in at the ground floor, and obviously they're going to be probably having some collaborations with Foundry DAO. I wouldn't be surprised at all over time if maybe Apollo becomes the front end for Foundry DAO. That makes some sense to me. So a quick example of one of the offerings of Foundry DAO, this is their main product. They've got several, but this one, I think is going to be incredibly popular because of what it is. So this is called their Hedge Plus strategy. Basically, it does some funky stuff within Mirror protocol and uses hedging to protect your positions to the downside, and it really protects them. So in their example here of a 1-year deposit scenario, the price of your asset stays the same, you'll make about 25% APR, which is pretty nice return. If the value goes down 50%, you'll still make money. You'll actually get 9% APR via their hedging. Price appreciates 30%, you'll get 35% yield. So you don't get huge amounts of value on the upside, but it's this last one here. If your initial product crashes by 99% of its value, you'll only lose 7%. That's phenomenal for a hedging strategy. So this just goes to show you some of the power of DeFi and what can be achieved. And I think this is going to be a super popular product for people to start parking profits, because you've still got some upside, but virtually no downside here. I mean, the price of your asset has to fall by more than 50% before you start losing money. I'm guessing around 60 to 70% before you start losing money. So I can see so many people just parking profits in here. So that's really encouraging, the fact that Apollo themselves own part of another protocol at the seed level. That is significant. I'm having a bit more of a look at what's coming down their pipeline. So they're going to be doing using Olympus Pro. So just flicking back here to Yunt Capital, you'll notice that the guys that are behind Apollo, Yunt Capital, are also involved with Olympus. And so this is the power of having a good VC behind you, because they can help grease the wheels between other products and other offerings. So yeah, if you didn't know, Olympus is coming to Terra. So it's a little bit of an alpha drop there in itself. And this is going to allow bonds to be issued. So the way these work is you can use your LP position. So for instance, the Apollo-UST LP position, you would deposit that into Apollo, and then you would actually get some Apollo tokens at a discount to the value of what you just deposited, which sounds a little bit crazy because you're using Apollo to buy more Apollo, but that's how it works. And the idea is that that LP position now belongs to the war chest, to the protocol. So war chest owned liquidity. That means that more and more Apollo tokens go off the open market and end up being owned by the war chest, which means they can generate further yield from it. Now, they have also hinted that they may include using Luna-UST for bonds as well. So that would be interesting to see how that goes. Again, Apollo safe, equivalent of the Gnosis safe for Terra. But part of that, which they haven't built out completely yet, is a payments module. So the idea is that the DAO can, have employees paid out of the treasury funds and potentially maybe even have a streaming payments system. Something similar to, say, Superfluid on Ethereum, if you're familiar with that, where you can stream payments in real time, block by block, which would be quite cool. That's not fully fleshed out yet, but it is rumored to be coming. So that's really cool. Another thing, because these guys are going to have a bunch of Mars tokens, they're going to have sway with the Mars governance. And that means they could probably propose that Apollo becomes trusted for the contract-to-contract lending within Mars. Now, that's significant as well because with the contract-to-contract lending, there is no collateral that's required. It's literally just using the smart contracts logic to make sure that the Mars protocol is protected. So that's another crazy thing. So via that, you can probably get leveraged yield farming via Apollo. So one example of how that would work is, say you deposit the Anchor-UST LP position, you could probably borrow the UST via Apollo's contract-to-contract lending contract with Mars. So what that means is you could have, say, 1,000 ANK tokens, but no UST to pair with it. But you could borrow, 1,000 ANK tokens worth of UST without any extra collateral and deposit a full LP position, which means you're basically 2x leveraging the yield farming that you would get via Apollo. So that's significant. If we just have a quick look back at the vaults. So ANK UST is currently earning 120%. Well, essentially that would double to 240%. Now, there would be some liquidation risk to you. If I'd say if the ANK price dropped, more than, say, 40% or something, you might get liquidated. So obviously leverage does involve more risk, but it opens up a heck of a lot higher returns if you can manage it effectively. So that's coming to Apollo as well. Some further things that they've got coming in their pipeline. I mentioned earlier the curve wars and voting escrow, VE. That basically is a mechanism that a lot of protocols in Terra are starting to look towards. So the idea is that you can lock up your token. So rather than just having Apollo, you would stake it and it would become Z Apollo. And the idea is that if you lock it up and time lock it for a lengthy period of time, you get more yield, more returns, and more governance power, more voting power. And that is significant. So protocols really want to try and own as much of another protocol so they can influence it and boost their own rewards. When you consider all the tokens that these guys already hold, they're in a really strong position to dominate this. They've got first mover advantage for the entire Terra ecosystem when it comes to the curve governance wars. And their own token is going to be implementing that same model. So you could get your Apollo and stake it for 4 years and you'll get higher returns and a higher amount of governance and a higher amount of Apollo tokens in issuance. So that's quite cool that that's coming. I know YFoundary DAO is going to have a similar model. And that's really interesting. Apparently the Anchor protocol is considering this as well. Okay, another thing that's significant is Holborn, the auditor, is now on a permanent retainer with Apollo. So they're basically going to have rolling audits continually, which that's also significant because a big issue within DeFi in general and crypto in general is it's very hard to get good auditors and there's a huge backlog. And this is why some protocols haven't deployed yet, simply because they're waiting for audits. Some of them have been built for weeks, months, and haven't been able to properly deploy parts of their protocols yet because they're waiting audits. So to have these guys as a retainer, I think that's a really clever use of the funds of the treasury, and it should hold them in good stead. It should mean they can scale out quickly new features, which is fantastic. They're going to continue to have more community farming events. I think that's just a win-win. It seems to work well. There's a collection of fees that go to the DAO because of that. And it's also a way for partnerships to form between these other protocols that are forming, especially NFT and gaming protocols. It's quite a clever way to go. Also, over time, they might end up being a bit of a Terra incubator. They've already had startup projects reaching out to them. So it's not a core focus at the moment, but it is definitely something over time that they're going to work towards. And same with protocol partnerships. There has been some rumors of discussions of treasury swaps. So that could be interesting. For instance, Mira might swap part of their treasury for Apollo. And basically they become sort of self-reinforcing. So that's a good positive something as well. And even further down the pipeline, there's discussions of what can Apollo DAO do outside of DeFi and even outside of crypto directly, and more real world type assets that they could potentially look at. So one thing they're considering potentially is maybe creating their own validator set, or their own validator, I should say, for Terra. So you could have an Apollo validator to pledge your staking rewards towards, or your stake towards. That's really interesting. And then they're even considering taking another step potentially over time and buying, physical assets in the real world to have their own servers run on. So that could be really interesting as well. It's just another way that they can make the protocol over time more self-sustaining, and that's the ultimate goal. So lots to be excited about here, guys. I think it's not really been well understood what these guys are up to, and the price has pulled back significantly since it launched, but it seems to be bottoming and is improving pretty rapidly with the way that Terra is performing as well. And obviously these guys hold a lot of Terra in their treasury, so it does make some sense that it's going to be reflexive to the price of Terra and Ethereum and the other assets that they hold. Okay, guys, thanks very much for watching. Please like and subscribe, hit the notifications bell, and if you like seeing this content, please share it with your friends and family. And again, thanks very much for watching.